Almost 22 years ago, in August 1988, 5 teams from different countries came to Australia for the first World Schools Debating Championships. And in the elegant splendour of the House of Representatives chamber of Australia's old Parliament House, Canada met Australia in the inaugural grand final. In 1993, after we'd had a championship every year, England made its first appearance in a grand final. Those 2 teams, together with Australia and the United States, have actually come to every single World Schools Debating Championships. In 1988, we had 6 teams, and I never had a chance to look out over a sea of faces of debaters, judges, coaches and managers as I look out today. As you have heard all through this week, we now have, in 2010, 57 countries taking part from every continent on the planet. This year, as you also know, we come together for the first time in the Arab-speaking world. And it's a good reminder to us that had this competition been taking place 1,000 years ago, we would, in the best traditions, as Dr. Hayat Ma'arafi reminded us a week ago at the opening ceremony, in the best traditions of Arab culture, language, and civilization and religion, would have been engaged in debate and discourse with many different countries taking part, except that it would have been in Arabic. And it's a reminder to us that the English language which we use for this championship is simply a device. It so happens that English is a language in which most people in the world can have some ability in communicating. That's why this competition is in English and for no other reason. And if any other language was to have universal acceptance, we'd have debates in that as well. In fact, debates take place around the world in many different languages, and many of you today come from countries where you have debate programs in other languages. Only last November, here in Qatar, Qatar Debate successfully launched its own Arabic debate competition. And it's a reminder, therefore, that over half the teams taking part in this competition this year come from countries where English is not the official national language. And if you're wondering whether that's an impediment, the answer is no, it's not. All of the judges would agree that we have seen some outstanding debates and some outstanding debaters from students and from teams for whom English is not the first language. And it's a humbling experience, I have to tell you, as a native English speaker, to see just how astonishingly good so many people are in what is for them a second or third or even fourth language. And lest you may think I'm just giving you kind words, one of the teams from a country for whom English is not a first language broke 4th. Then came England, and then came another team from a country where English is not the official language. A very impressive performance. But today we come to the culmination of it. After 228 first round debates, that is 684 individual mark sheets filled out by judges, after 8 octo-finals, after 4 quarter-finals, and after 2 semi-finals, it comes to just 2 teams who will be battling it out this afternoon in the Battle of Minds for the grand final of the 2010 World Schools Debating Championships. May I introduce to you first of all the proposition team making their first appearance in 22 years in this championship in the grand final, Canada. And making yet another appearance since that first appearance in 1993 in a grand final, England. And the 2 teams will, of course, be debating a motion, because we can't have a debate without something to talk about. And this is a motion that has a resonance and a relevance for pretty well every country around the world in the last 2 years in particular, that governments should never bail out big companies. We also have to acknowledge that debates not only need a motion, but they need adjudicators. We've had over 120 judges who have been giving up their time and their expertise in the course of the last week or so, whose feedback to students has been invaluable. And judging our grand final panel tonight, or this afternoon, we have a panel drawn from all parts of the world. The 11 judges who will be judging the grand final are Erin Manyam from Singapore, Beth James from Wales, Kameron Wiley from Scotland, Claire Ryan from New Zealand, Jana Corrie from Greece, Avis from the Netherlands, Leeann Horwitz from South Africa, Mavis Mumtaz Ahmed from Pakistan, Ragnar from Estonia, Riah Dhamma from Indonesia, and sharing the panel, my colleague as co-chief adjudicator, and also, as you can tell from the accent, from Australia, Simon Quinn. I think our 2 timekeepers are ready. Our 2 teams are ready. In which case, may I introduce to you the first speaker for the proposition team, Iqbal Qassam.
For too long have big companies manipulated taxpayers. For too long have they exploited society. For too long have they exploited the fact that they provide something that people either want or that they need. It's time for us to tell them that we are no longer going to tolerate that exploitation. And that's why we on Team Canada are here today to propose that we should never bail out big companies. We believe in order to win this debate, we have to prove to you two things. We first have to prove to you that in regular economic cycles, bailouts are harmful to the economy and to people in general, and we also have to show you that in abnormal business cycles, bailouts are both ineffective and harmful, as well as the fact that the government has better tools that it can use. So what exactly are we talking about? First of all, what is a bailout? We believe that a bailout is that when a government provides a monetary package designed to rescue companies that face failure. And this can take a lot of different forms, including but not limited to governments paying off a company's debt or injecting cash into a company, or even the government assuming responsibility for a company's debt. We see two situations where bailouts are used. First of all, with failures in regular business cycles when big companies simply fail either because they made poor decisions or because they're no longer necessary in a market. In this case, we believe that they should fail and should not get a bailout. We're looking at companies like Chrysler, like GM. There's a second situation in which bailouts are used, and that is the failure of essential services. In the failure of essential services, we believe, again, that bailouts are inappropriate because of the fact that the government has better tools that they can use to address those situations. So what kind of tools are we talking about? Well, we think that there are three. The first one is regulation, and we think that bailouts actually undermine regulation because bailouts incentivize companies to look for loopholes, something that we're going to prove to you in our first argument on Team Canada. The second tool is nationalization. We think that if a government needs to ensure that a service continues being provided, then the best way to do that is by taking that service directly and removing it from the free market altogether, rather than trying to tinker with the free market and to try to get it to provide something that it's not designed to provide. And we think that nationalization should be very rare and only used in cases of imminent and direct societal harm. Finally, we think that bankruptcy is a natural mechanism that can be used to preserve the service that needs to be provided, but removing the entire problematic framework that makes it unprofitable. And we're going to be operating under the team line that the cost of doing business is sometimes failure. We have three arguments we're going to give you. I'm going to be talking about passing the buck, which is this idea of the moral hazard, and why it's principally wrong to get taxpayers to pay for something that they didn't do wrong. We're also going to be talking about this idea of out of the ashes, which are the benefits of creative destruction in the market. And finally, we're going to talk to you about this idea of not the sharpest tool in the shed, showing you exactly why bailouts are not necessarily the best way to go about preserving the integrity of the economy. Let's begin with this first idea, which is passing the buck. What we're going to be proving to you under this argument is that bailouts are bad because they transfer accountability to a party that should not be responsible for that particular action that has been taken. And the first part to this is principle. And we think that the moral hazard is something that needs to be considered. We think that it is principally wrong for the taxpayer to be the one to refinance the failure of big companies and to get absolutely nothing in return apart from a little IOU card, ladies and gentlemen. We think that many of these companies are companies that have actively harmed the taxpayer by completely neglecting social responsibility. And we think that by using hard-earned tax dollars to pay for those companies' failures, we are principally not justified in doing so. We also have to take a look at the practical ramifications. What we think is that if you set the precedent that the government is willing to take the fall for big companies, you remove the deterrent that stops excessive risk. Why? Well, what we would say is that bailouts create a safety net for the people at the very top of the company. We're talking about CEOs, upper management, and shareholders, and we think that in all of these situations, at least with CEOs and management, they almost always stay in power. Let's look at shareholders, though. They always stay in power, ladies and gentlemen, no matter what kind of restructuring a bailout can provide. They cannot be removed by any other method than nationalization or letting the company completely fail. And we think that the safety net that you create actively rewards these people for taking excessive risk. And we think that we have to understand that taking excessive risk can actually be very profitable in the short term, and that's why bailouts push the upper management, CEOs, and shareholders in that direction. We think that companies should know that the governments will not be financing their poor decisions, and if they fail, they will be on the street, not the government, not the taxpayer. I'll take you in a second. Here we take a look at the example of savings and loans associations in the United States, which were completely 100% backed by the United States government. As a result, it costed the taxpayers $300 million, something Team Canada is not prepared to accept. Go ahead.
Does any CEO want on his CV that his company had to be bailed out by the government?
We don't think that CEOs necessarily want to be bailed out by the government, ladies and gentlemen, but we think that bailouts create a safety net. Moreover, CEOs are not the proper people, ladies and gentlemen. We think that the people who need to be accountable are the shareholders, the ones who actually control the CEOs, the ones who vote in the CEOs and have direct and indirect control over their policy. And we think that bailouts are a very inefficient use of money to this end. And we will take a look at the example of the most recent bailout package that was given to GM, which costed $700,000 US per job that was saved. So now that we've shown you that there's both a principled and practical problem with the moral hazard, let's take a look at this idea of creative destruction. And what we're saying under this argument is that by allowing companies to fail, you actually get a better economy in the long run. Let's take a look at the first idea here, which is the benefit to the entire economy. What we're saying is that you should let companies that can't support themselves fail, because this guarantees long-term economic success and stability. How does this occur? Well, what we would say is that good business then gets incentivized. We think that bailouts reward companies that are large and employ a lot of people, but are not necessarily profitable and provide good services. And we think that that's a bad thing. We think that there are two types of companies. There are those who fail because of poor decisions that they make. And we think that in this situation, we should absolutely let them fail. The reason for that is because it's economically unviable for a government to pour money into a company that is economically unviable, because we think that these companies rarely just get profitable on their own accord. We would look at the example of Chrysler, where yes, we bailed them out once and hoped that they would get profitable, but in the end, they didn't, and they've come back asking for more. We would take a look at the second type of company, which is those that fail because of factors outside of their control. And we think that in these situations too, we should let them fail, because we think that companies must be accountable to themselves. They have to know that they do not live in a vacuum and that people's needs and wants in society change. We think there is no principled right to success for any institution or individual in the economy. We think that market forces replace replace bad companies with better companies, and in the end fill those voids. So why do we actually care that we get better companies? Well, we think that better companies provide cheaper and better services to the public, which we think is a good thing. So what happens if we go and fund bad companies? What we would say is that the government ends up pouring cash into a lot of no-return investments. We would look at the example of Japan's lost decade, in which Japan bailed out lots of bad companies and today has the highest debt-to-GDP ratio out of the entire developed world, as well as a massive unemployment rate. And finally, we think that it's absolutely principally wrong to allow companies that should not be succeeding according to market forces to succeed. And the reason for that is because you punish companies that are both successful and profitable. First, by preserving the market share of companies that are bad, but you also force unprofitable ones out of the market. And here we would look at the example of Jpmorgan Chase, where they were able to pay higher interest rates on their deposits because they got a very cheap loan from their government, therefore undercutting better competition, companies who were much more fiscally responsible. Therefore, what we've clearly shown you is that both on principled and practical grounds, this motion must stand, because in the name of all colonies, Team Canada begs to propose.
To introduce the argument for the opposition team, the first speaker, Edward Schwitzer.
Team Canada have presented to you today a world which is dominated by numbers. For them, businesses are simply judged by the money they make. But what they fail to account for are the people that really matter: employees, customers, and whole communities. And that's who Team England want to protect today. We believe that with the correct model and with the right reasons, the government should bail out certain big companies as a last resort. Now, at the moment, we have three main methods that this already happens: subscribing to shares, loans, and guarantees or insurance. And what we think is that in these cases, the government should bail out certain companies, provided two things. Number one, that the government takes shares in any company they bail out, proportional to the amount that they are giving it to help it out. And in doing so, cancel any existing shares that they need to do that. And two, create an independent investment vehicle to manage this investment and sack management where appropriate. And Team England comes to you today with the team line that businesses are worth more than the bottom figure on their balance sheets. Now what I'm going to do is first of all rebut what we heard coming out of First Prop, and then we're going to show you why we should bail out certain big companies in certain cases. I'm going to talk about when there's a local or regional implication in terms of the economy, and also in terms of the wider economy. And then my partner Hassan is going to talk about when companies have a specific social function. So let's look at what we heard coming out of First Proposition. Now the first thing we're a little bit surprised by is that they said they support nationalising companies in certain circumstances. We think all their arguments about providing a safety net and saying, oh no, that's okay, are exactly the same if you're going to say, well, that's okay, we'll just take over your company and we'll still keep you there. But I'll talk about that later. So then we had this whole moral hazard issue. And first of all, we don't think it applies because under our model, we are going to get rid of these managers. We are going to get rid of these CEOs. When we take over these companies, we're going to fire them. No manager or CEO wants to be fired, and therefore they have no incentive to act in this manner. We also think that even if this were the case, the harms created outweigh this anyway, but I'm going to talk about that later. We heard about this kind of moral point that taxpayers are paying, and of course the taxpayer shouldn't pay. Ladies and gentlemen, it's the taxpayer that is going to be harmed when these companies fail. It is the taxpayer that is going to be harmed when they are jobless, when they can't pay their mortgage, when they can't do all these kind of things that they need to do. So we don't accept that kind of rhetoric. We also think it's factually wrong to say that, like, when a company is allowed to fail, other companies don't act in a reckless manner. Like, Barings was a huge financial institution that was allowed to fail in the 90s, and yet we still saw companies acting recklessly after that was already allowed to fail. So clearly, they are just factually wrong, and they seem to have provided no evidence as for otherwise. Finally, we heard, like, companies that can't support themselves good, get rid of them. We don't agree. First of all, it's not true that they will never be profitable. The US government bailed out Lockheed in the 70s, and now it is turning over a profit, ladies and gentlemen, because it was in one period of difficulty. And we also think there are cases when these managers could not have foreseen the circumstances. Could the CEO of American Airlines have foreseen that 9/11 would have completely ruined the airline industry for the next few years? No, he could not, ladies and gentlemen. Yes, sir.
But isn't it true that it's good business practice to save for a rainy day?
Sir, we don't think that good business practice is letting all the employees and all the people that rely on these companies get harmed by what you're proposing. And that's what I'm going to talk about now. First, I'm going to start with looking at businesses that are critical to a local or regional economy. Because what we see is that in many communities, there is one main employer, and it's catastrophic if that employer is allowed to fail. In the short term, we just see that people within that company lose their jobs and suffer. We're talking about ordinary people not being able to pay their mortgage and having their homes repossessed. But what we see in the medium term is even more worrying. We see that other companies in these areas also have to lay people off. Companies that, for example, supplied that original company, or local shops and other things that rely on the money that was generated from that original employer. And therefore we see literally over 50% of people in these areas becoming unemployed. Now this has even worse long-term consequences. What we see is that adults in these areas that have lost their jobs lose feelings of self-worth. They feel they can't even provide for their own families. And studies have shown that these have very dire psychological consequences. We see problems with depression, with suicide rates going up, with alcoholism, with drug abuse. These are not things that we want to see happening. No, thank you. There's another issue though, and that issue is children. Children in education who have no role models and no aspiration because all the adults they know are not in employment. And we're not just talking in hypotheticals here, ladies and gentlemen. We've seen this happen before. We've seen this happen in Western Pennsylvania, for example, when certain towns relied so heavily on the steel industry that was allowed to fail, that still now, even though the problem happened in the 80s, we are still seeing problems in these communities. The other issue is that these problems persist because no employer wants to go into an area where there is such degradation of the workforce. Yes?
Son, does Team England today support the restructuring of failing companies?
What we support is keeping companies going, even at a loss, if it enables people in these communities to continue with their livelihoods, to continue to be able to feed their children, and to continue to be able to make money. But what we think is that in the long term, it is more likely that people will get jobs under our model, because you create workforces which are unemployable. No employer wants to go into these areas and get jobs when there are such social problems there. And that's something we're going to talk about later in our case. But let's now look at businesses that are critical to the wider economy. Because what we recognise is that there are certain key businesses which allow other businesses to function. And if they fail, others fail. We look at insurance companies, which small businesses rely upon because they need to be able to mitigate big risks, and yet themselves don't have the means to do this. We look, of course, at banks. All other businesses rely on banks to be able to operate. Like, if we look at small companies, let's be quite clear. If you have a plumber, right, and he has a loan on his plumbing van, which is called in early, he can no longer be a plumber. That is simply how it works. But if we look at the wider effects on market confidence, we see even more of an issue. We see that allowing the failure of, for example, Lehman Brothers saw all the other banks also losing a lot of value in the stock market because no one had any more confidence in the system. And the US government, in the end, had to bail them out because they saw that the interconnectivity of banks meant that once a few of them started falling, the whole market would collapse, ladies and gentlemen. And that's not something that we stand on seeing on side England. Under their model, you tell off naughty CEOs and reckless managers. But you also cause irreparable damage to livelihoods and society as a whole. And that's why we stand proudly in opposition today. Thank you.
And in case you're wondering what the short hiatus is between speeches, I have to give time to the 11 judges to finish taking their notes, and then I get a signal that we're ready to go. We're now ready for the second speaker for the proposition, Keenan McNeil.
Team England today told us, in more words, that we should think with our hearts. Unfortunately, when you think with your heart, you don't think with your head. And we think that this is the problem that underlies Team England's case. They're not thinking clearly, and they're using the wrong tool for the job. And because of that, on Team Canada today, we support the workings of the free market because we think that the free market is for the most part self-regulating. But when it's not, in those doomsday scenarios, we actually see that there are better tools than direct government bailouts. Now let's look at exactly what Team England told us today, starting with their first argument, the idea of local and regional economies. Well, we disagree with this on a number of levels, but before I get into it, let's look 100 years ago. In the northeastern United States, the buggy industry was booming, and buggies were being made at enormous scales. Unfortunately, Henry Ford invented the car. And on Team Canada today, we think that was a good thing. Economies change, economies shift, economies move, and sometimes people have to move with them. But let's look at exactly what they said. They said that in some areas there's a single employer. There's a major employer. You see this in areas where manufacturing is the only job that's available. And on Team Canada today, we say that it is a shame that people lose their jobs when companies go under. But on the other hand, what we're saying to you today on Team Canada is the best way to have the most people employed in the best jobs is to have a functioning economy, a healthy economy that is growing and is not being killed by bad industries that are no longer profitable. So we reject this idea that the best way to protect people is by protecting individual companies. We say instead that the best way to protect individual people is to protect the economy as a whole. Now let's look at their second point. When we look at this idea of insurance companies and banks, And what we would say is that the only industries that have this kind of widespread market influence, this kind of insidious web of interconnectedness, we would say those are only financial institutions. And what we're suggesting to you today on Side Canada is that the better way to deal with these type of companies, these financial institutions, is through nationalization. Because you preserve the ends, the social goods that we see from these companies without preserving the sickened cores of them. What we would say on Team Canada is that the best way to create a good economy is to prune. We saw this in South Korea, when between 1966 and 1974, the GDP grew enormously. But only 2 of the top 10 companies in 1966 were still afloat in 1974. We'd say that systematic pruning is necessary for the growth of an economy. And that's something we think Team England needs to deal with today. But what have they told you about our case? Well, they told us that the taxpayer will be harmed, and we reject this. We think that the taxpayer on the whole is not being harmed. It's individual taxpayers in certain cases are being harmed. And we don't think that it's the responsibility of all taxpayers to pay for the mistakes of a few individual management individuals and shareholders. And beyond this, we would say that saving for a rainy day is a part of good business practice. And we don't accept that England just says, well, you know, we want them to save for a rainy day, but not really, and they dodge that POI quite effectively. But let's look at what Team Canada is telling you today. What we're saying on Team Canada is that the cost of doing business is sometimes failure. And the effects of that failure are often beneficial for the economy as a whole. We've already shown you that at a principled level, this is unacceptable, a point that Team England never fully addressed. And we've also shown you this idea of out of the ashes, that new companies come when old companies die, stronger companies, better companies. But let's look at our third point. Not the sharpest tool in the shed. And what we're going to suggest to you today is that bailouts are ineffective at solving the problems that they are designed to treat. So let's look at this in 2 ways. First, in the normal business cycle, and second, in the abnormal business cycle. We say that in the normal business cycle, they're used to protect large, profitable companies that hit a rough patch. It's a sort of rainy day loan. And we'd say that this actually, I'll take you in a moment, this actually doesn't do what it's supposed to do, which is get them back on their feet. We say it does this because it encourages bad business and because companies don't actually become profitable, because we don't see the major restructuring that's needed. Yes, sir?
Sir, if the government has to bail it out and take control of it, then they will restructure and they will improve it. That's the whole point of a government taking over.
And that's nationalization. That's not a bailout. What we see on Team Canada is that that kind of restructuring comes with Chapter 11 style bankruptcy or with nationalization. But what we've been seeing with bailouts is that they're usually done in a form that keeps the same shareholders and keeps the same management because they're seen as necessary for the survival of the company. We reject that. We say that we need new management, and we think that only under new management will we see these companies radically alter to fit into a new world economy. We look here again at the idea of Chrysler in 1979 that received a bailout, paid it back quickly, but less than 20 years later was asking for another bailout. We challenged them to address the problem of continually asking for bailouts and of zombie companies of the like that we saw in Japan's lost decade. What we think on Team Canada is that in normal business cycles, bailouts are just enough of a jolt to flatline. And because of that, we don't think that they are appropriate during the normal business cycle. But let's look at the abnormal business cycle, the bubble business cycle, the kind of business cycle we're looking at right now. And what we would say on Team Canada is that during these times, bailouts are used to protect the cornerstones of an economy. Now, what exactly does that mean? Well, we'd say these cornerstones are twofold in nature. There's ones that are strategic industries, things like defense and food, whose failure could be dangerous to security. And secondly, we see financial institutions like banks and insurance companies that can lead to systemic collapse when they go down. What we would say to you on Team Canada is that in either case, the end product is what is valuable to society, and because of that, we would suggest to you that it's the government's role and the government's duty to take over in those scenarios with nationalization. And what we would suggest to you on top of that is that bailouts don't actually accomplish the goal of protecting these industries and getting everything back on its feet. Why is this? Well, let's look at the doomsday scenario. Banks start going under. They're racked by debt. They stop giving out loans. Well, why is that bad? Well, we'd say to you on Team Canada today that day-to-day business operations require short-term loans. These are bought and sold on the commercial paper market. And when banks are in trouble, they stop lending. And we see what's called a liquidity crisis. I'll take one of you in a moment. Whatever. We see what's called a liquidity crisis, or, to use the popular jargon, a credit crunch. That is how we see systemic risk. And that is where we see the problem of systemic collapse. Well, what happens when bailouts are used to address that? Well, we see that banks pay off their debt, but they don't get back into the lending side of their business. We saw this quite clearly with Citigroup, who used the government's money to pay off its debt, but still hasn't returned to being an active member of the commercial paper market. So what we would say is that when bailouts are used, companies button down the hatches and try to just get through. But because of that, they actually hurt the economy as a whole. When we have nationalization, we maintain the social good of a company's product. We continue lending regardless of the profit motive. And we saw that being very successful with the Portuguese bank BPN, which maintained the commercial paper market activities and allowed Portugal as a whole to avoid much of the contagion problems that we're seeing in the rest of the world. So on Team Canada today, we're not much gardeners, but we think that pruning is necessary for a healthy economy. And beyond this, we think that when we see systemic collapse, nationalization is the best option. It's the sharpest tool in the shed. And because of that, we beg to propose.
To continue the case for the opposition, I call on Hassan Dinja.
Why should governments ever spend money intervening in the market? They do it because they realise that when left to its own devices, sometimes that market fails. Sometimes it leaves out to dry exactly those people who are most vulnerable and who most need the government support. That's why the government steps in, and that's why in some circumstances today on Team England we tell you that it must bail out big companies. Ed's already shown you about why we might need to bail out businesses that are critical to local and regional communities, those that are critical to the wider economy. In my speech today, firstly I'm going to do some quite extensive rebuttal from what we've just heard in that speech, and then I'm going to deliver the third point of our case today, namely that we need to bail out businesses that are critical and provide critical social functions. So let's look at some rebuttal. And firstly, let's hear what we heard about Ed's speech. Because Ed told you that these things affect whole communities. There are sometimes towns and cities where almost everyone there is being employed by the same person. We look at Detroit, where almost everyone in that city is employed in the motor industry. And all they had was the rather glib response, well, this is a shame, but it's better for the economy overall. We think Team Canada fundamentally misunderstood all our analysis about how this irreparably damages that workforce such that it will be almost impossible for generations and generations for that town or that city to recover. It degrades the workforce by denying it it degrades the workforce by denying it jobs, by denying its adults' children education, by denying it aspirational figures, by denying it a sense of where it's going. We never heard any engagement with that. We think that's wholly irresponsible. Ed told you also about the effect on the rest of the economy, and the only response we heard with this was, well, these are only financial institutions. No, ladies and gentlemen. If a car plant is shut down and thousands upon thousands of people working there have no jobs and have no income and can't spend money and have to move out of their homes and can't send their children on any, to school or anything, we think this is a pretty bad thing for the economy overall. We think that's another thing that Team Canada have completely brushed over. We also told you how, this would do more harm overall. And they said, well, companies should save things for a rainy day. We don't think it's very reasonable in every single case to say to a company, you should have foreseen a natural disaster, you should have foreseen a terrorist attack, you should have foreseen unreasonably volatile market conditions. That's not always the case, and we'd like to hear you substantiate that. We think there's a limit to how much you can reasonably save. Then we heard about other tools. We heard about nationalization. We love this, ladies and gentlemen, because we thought this debate was about companies failing and governments going in and rescuing them. Guys, we're sorry if you lost the toin cost, right? But we thought that you guys were meant to get up and say the government shouldn't intervene. We thought we were meant to get up and say they should. We think nationalisation is basically a bailout in many of these circumstances. We don't agree with these kind of tactics, right? Let's see, what are the differences? In our model, the government goes in, buys up the shares, influences policy. In your model of nationalisation, which is apparently wholly different, the government goes in, buys shares, influences policy. Furthermore, the argument is in tension with two of their other points. One, all the analysis about the free market and why innovation and not having a safety net is inherently good. Complete tension, because presumably if you're just going to be nationalised, all the same principles apply and all the same harms that Team Canada identified apply. Secondly, it's in tension with all this stuff about the taxpayers, because they don't think the taxpayers should ever be responsible for CEOs failing. Well, why should they be responsible when a business is nationalised? We think that your proposal is essentially our proposal, and unless you come clean, we're going to continue debating on the assumption that going in and controlling a company in some circumstances is exactly what we're proposing and what we're meant to be proposing. No, thank you. So let me now look at this idea about businesses that provide a critical social function. Because we recognise that there are businesses that produce benefits to consumers, to customers, to whole societies. Benefits that aren't always taken into account by the economic output and the economic value of that company. We look, for example, at postal services in many of the countries in Western Europe. We think that you have big companies, right, switching over to email. You have customers switching over to internet banking. But you still see literally millions of people around the world who rely on these services. You see small businesses who can't afford the immediate switch over to email. You see individuals who might be poor, they might be elderly, they might live in remote areas and therefore might need that postal access. You deny them that. Tell us how you don't.
You told us you didn't want to restructure companies insofar as you want to lay them off. So how are the companies going to become profitable?
We didn't tell you we didn't want to restructure companies. We told you that when you have people from the government on the boards of these companies, controlling them and telling them what to do, in such circumstances as restructuring is better for that company, is better to save jobs save jobs. We think that's the kind of thing we do. If we think restructuring is just about laying people off, that's not what we do. And for all the reasons we've given about the kind of communities that suffer in the kind of ways we've outlined and still haven't been responded to. We think we think that the social utility of the people in these kind of circumstances, for example, being able to send a letter, right? Being able to get their pension check, being able to keep in touch with their friends and family, is something that can never be accounted for by the amount that they are willing and able to pay to send a letter. Never be accounted for by the amount someone's willing to spend to send them a letter. And we think because of the social good involved, no thank you. We think these positive benefits are something that the government needs to encourage, just in the same way that they encourage things with welfare generally. And we think we're going to give you 3 further examples of this wider principle, ladies and gentlemen. The first example we'd like to give you is national security. The reason the US government bailed out Lockheed in 1971 is that it wasn't an economic project, right? It was an interest that it said, it is in our interest strategically to have our own arms manufacturing industry. That's something we want to promote. And that's a company, by the way, that is still in operation after only a temporary bailout, and by the way, now making profit, Team Canada. We'd like you to answer to that. We don't think it's true to make this blanket assertion that all governments that are given temporary bailouts therefore run themselves into the ground over and over again. Go.
Yes, because we let them Yes, because we let them lay off workers.
So we didn't allow them to lay off as many workers as they would have done otherwise. We don't defend every single bailout that's ever taken place, but what we said is that this bailout, saving many of the jobs, was better than saving none of the jobs, which is what you'd advocate. The second kind of thing we think fits this general principle is energy security. We think that many countries realise that they have a need for their own independent sources of energy. We think if you cut it off, they can't necessarily function. We think that's, for example, the reason why Ireland is still funding and still bailing out Campus, because it realises that it has a strategic interest in having its own indigenous ability to produce oil. That's something tremendously important. And the third thing is regional transport. It's crucial to have regional transport for regional development, for economic linkages, ladies and gentlemen. That's why the Japanese government bails out JAL, the Japanese airline industry, to run inter-island flights. It recognises that there is a social good to equalising the economic development in that region. It's the same reason why the Penn Central Railroad was bailed out, because the US government realised that there was a need to have the northeastern part of the US in contact with one another, ladies and gentlemen. The world of Team Canada is a world where the elderly cannot receive their pension checks, where people in remote areas cannot always connect with the rest of the world, and where whole countries are allowed to let strategic industries like national security and like energy security to fail. That's not something we're willing to accept on Team England.
To continue for the proposition team, the third speaker, Venu Goswami.
Team England today doesn't know what a bailout is. A bailout, ladies and gentlemen, is when you preserve the private structure of a company and give it a chance to rebuild. Nationalizing a company is when you take the service that company provides, get rid of the company, and then let the government provide that service. And that's a distinction that Team England hasn't understood today. So we think it's very ironic. We think it's ironic that they're saying that their proposal is exactly the same to ours, ladies and gentlemen. We'll take that as a very good sign in the debate. Now, Team England today wants to protect people. Team Canada realizes that the best way to do this is fixing the economy that they live in, not keeping it alive through bailouts. And that's what I'm going to prove to you by analyzing this debate in terms of the three main actors in the debate. Firstly, governments, secondly, companies, and thirdly, individuals. And by going through each one of those in turn, I'm going to show you why Team Canada will carry this debate. So, firstly, let's talk about governments. And Team Canada said that the role of the government in the economy fundamentally changes in different situations. You have normal business cycles, and you have abnormal business cycles. And Team England has chosen to engage us on both, which we're very pleased with. So they talked about normal business cycles and said that we'll still bail out these companies because there's a chance they might become profitable. Essentially what they're doing, ladies and gentlemen, for a side that wants to protect taxpayers is gamble with taxpayers' money to see if these companies will become profitable. That's not something we believe that governments should be doing. Secondly, we talked about abnormal business cycles, and we've already proven to you that many better mechanisms exist. And their only comeback to this is, well, that's the mechanism we're proposing. But what we've proven to you already is, no, it's not. They're completely different mechanisms. Team England hasn't understood what it's arguing for, ladies and gentlemen, because what Team Canada has done is argue for nationalization. And just because Team England doesn't see that coming doesn't mean that suddenly it's their point. So basically what we'd say is nationalization allows the services that these companies provide to be maintained because it's that overall social good that Team Canada wants to protect. What Team England wants to do is preserve the private structure of that company, and that's worrisome for two reasons. Firstly, we would say that when you're restructuring the company through their bailouts, what happens is that the shareholders in question, the shareholders who vote in CEOs, the shareholders who are liable to that moral hazard, stay the same. Essentially, you're just giving them a chance to rebuild once again. That's not something we support. Now, essentially what they're saying is there's still a safety net that exists. But what we would say is that safety net extends, ladies and gentlemen, not in nationalization because the company is completely removed and becomes a property of the government, but only in bailouts where the private structure is maintained and shareholders get a chance to build up once again. So we believe with the analysis on the role of the government, Team Canada has carried this point. So let's look at this idea of companies. Now, essentially, we talked to you about creative destruction with this analysis of companies. And we talked to you about companies that fail by themselves and companies that fail because of factors outside their control. And we've showed you that in both cases, they should be allowed to fail. And what Team England has said is that, well, these companies can't have foreseen some of these things, therefore it becomes the prerogative of the government to bail them out because they were short-sighted, sort of like Team England today when they didn't understand the fundamentals of this debate. But in any case, what we would say is they haven't clashed with the analysis that no company has an inherent right to success. No company gains a right to its success just because the service it provides is needed by a lot of people. We reject this premise, ladies and gentlemen, that somehow companies that are providing important services, when these services can be provided by the government, now have the right to gain tax taxpayer dollars to bail themselves out. We reject this premise from Team England today. And they still haven't classed with this idea of natural competition that comes about by preserving the free market and how that's stifled, and how through bailouts, perfectly good companies who had no mistakes in the first place actually can't compete with companies receiving bailout money. That's not something we support. So, Team England then stood up in their second speech and sort of changed this analysis of companies. They said that we support keeping companies afloat at a loss to preserve jobs. We would say the best ways to preserve these jobs is to make sure that they exist in companies that are sustainable, not to keep artificially propping these companies off just to preserve jobs. They talked about banks and key services. In fact, that was their whole third point, social services. What we would say, ladies and gentlemen, is we've already dealt this idea of key social services and strategic industries, saying that they can come under the jurisdiction of the government when the need so arises. What we don't support is tampering with free market forces to allow these essential services to continue to be provided. We believe that the government should assume direct responsibility to let this happen. Now, let's look at the final actor in this debate, the individuals involved. Now, Team England has really hung its flag very strongly on this idea of unemployment. We want people in these small towns, I'll take in a second, sir, to keep their jobs. And we object to this on a number of levels, which I'll explain after this POI.
As insurance companies, one by one, go under, do you think that makes it more or less difficult for companies to secure insurance?
Can you repeat the last part of that, please?
Does that make it more or less difficult for small businesses to get insurance?
Well, again, you're talking about this idea of the interconnectedness of companies. And what we've already shown to you, ladies and gentlemen, is that there are many different ways in which this interconnectedness can be fixed. And if indeed an economy is so integral, and indeed a company is so integral to the well-being of an entire economy, we would preserve it. So what we'd say, ladies and gentlemen, is getting back to this idea of unemployment, Team England's strongest point in this debate, it would appear, this idea that people shouldn't be allowed to lose their jobs. We object to this on two levels. Firstly, let's examine what Team England has actually said with regards to their proposal to fix companies. They say they want to go in and restructure these companies. What inherently comes with this restructuring, ladies and gentlemen, whether or not you accept this idea of bailouts or nationalization, which Team England will no doubt try to muddy in their next speech, what we would say is what inherently comes with restructuring is jobs being lost. So what Team England has essentially conceded is that they're willing to accept a loss of jobs. Now we're just haggling over how many jobs should be lost. And we take exception to this as well. So let's examine what Team England is actually proposing today. They say they want a continuous cycle where jobs are lost through unsustainable companies, while what we're proposing is perhaps a slightly larger loss of jobs at once to ensure that the companies in place are actually sustainable. Team England would have people continually lose their jobs in a vicious cycle which bailouts give them no opportunity to escape from, whereas Team Canada, by letting these companies fail, might lose more jobs in the short term, but in the long term preserve the integrity of the economic system, and through that, jobs as well. And that's something we support on this side of the House. Now, another point they brought up was the idea of pensions and individuals having money and savings that they want to uphold. But once again, ladies and gentlemen, Team England are demonstrating they really aren't using the sharpest tools in the shed. Many governments already have lots of mechanisms they use to ensure individual savings, like in the United States, where up to $100,000 of savings in banks of individuals is already protected anyway. We don't see why bailing out banks, some indirect mechanism of getting pensions back, is needed. So let's examine what we've seen in this debate. First and foremost, we saw Team England that chose to take this idea of bailouts and make it nationalizing companies, which is not something they're supposed to be proving today. And we believe in this speech we've proven to you distinctly the difference between bailouts and nationalization. And thus the mechanisms that we've proposed, that Team England has tried to ignore, still stand. We've proven to you this idea of companies, that no company should have the inherent right to success just because its service is vital. We've talked to you about individuals and shown you that the best way that we preserve the jobs of individuals is to ensure the economy they live in actually becomes healthy, even if that means accepting slightly higher unemployment in the short term. So, ladies and gentlemen, because bailouts are practically, morally, and economically bankrupt, we beg to propose.
I now call the third speaker for the opposition team, Matthew Handley.
Team Canada seem to be in a bit of a muddle, ladies and gentlemen. Because on the one hand, they support the free market to the death, are against government intervention, and are against the duty of the taxpayer to help out those in need. Yet on the other hand, they're more than happy to allow government to use taxpayers' money, go into businesses to intervene, to restructure and rework those businesses. That's why they've lost today's debate, ladies and gentlemen. I'm going to do this by looking at 4 key areas. First of all, I regret to have to do this in the third op speech of a final, but I'm going to have to clear up this nonsense of nationalisation. Secondly, I'm going to look at, will it make the failure of more companies more likely? We say no. Secondly, will the wider economy benefit? We say yes. And finally, will citizens suffer if proposition is allowed to pass? We say yes. So first of all, nationalisation. And we think today, when everyone came into this room, everyone was expecting side proposition to stand up against government intervention and see side opposition stand up for government intervention. This is clearly not what today's debate is about, ladies and gentlemen. If they want to propose nationalisation, that's fine with us. It helps us quite a lot, because it concedes all their analysis that the government can run businesses effectively. No, thank you. It concedes all their analysis that the taxpayer has a duty to intervene, which their first speaker made quite a big deal about saying that they didn't, ladies and gentlemen. They've conceded our model. Let's look at lots of the bailouts from the past 2 years. Let's look at the bailout of RBS. All the bailouts that have been in the news over the past 2 years have taken on the same characteristics the side proposition support today. We think they're standing in favour of bailouts. We think they're on the wrong side of today's motion. Go ahead.
But AIG, Citigroup, Jpmorgan Chase, Bear Stearns, which is a part of Jpmorgan Chase, and Lehman Brothers are all private companies. It seems like that's not something that nationalization would allow to happen, right?
Okay, if you don't think nationalisation would be allowed in these circumstances, we'll use bailouts in these circumstances. We'll use the bailouts that we've argued for time and time again. Let's look what happened when Lehman Brothers was allowed to fall, ladies and gentlemen. Other banks in the wider economy, which had done nothing wrong, which had invested responsibly, fell because of their actions, ladies and gentlemen. If AIG had been allowed to fall, ladies and gentlemen, then loads of little businesses, as Hassan pointed out, wouldn't have been able to get insurance and would have collapsed if a single lawsuit was brought against them. And this leads me on quite nicely to the second point. Will it make the failure of companies more likely? Because they raise this nonsense about the moral hazard, ladies and gentlemen. It's going to encourage recklessness. Let's be clear, no one wants to have a bailout happen to them. First of all, because we've explicitly stated in our model that we punish the decision makers where necessary. We're quite happy to kick reckless people out of their jobs to ensure it doesn't happen again. Secondly, it gives these CEOs, it gives these decision makers a really bad reputation and a black mark on their CV, which they quite frankly don't want to have. Finally, it results in hundreds of thousands of job losses. That's not something we're going to let happen just so Team Canada can prove a point, ladies and gentlemen. No, thank you. They also said that it's not fair to fund bad companies. Well, first of all, we've just proven why that's not the case. But secondly, what about the good companies, ladies and gentlemen? Are Team Canada really willing to let the entire American airline industry go down because they didn't plan for a terrorist attack which would turn the entire nation off flying in a way that has never been seen before and will never be seen again, ladies and gentlemen? We say no. Second point, will this benefit the economy? And we've proven to you why it definitely will. They said, oh well, there are better mechanisms, without really explaining what any of these were, except nationalisation, which clearly falls on our side of the house. We say these better mechanisms aren't mutually exclusive to bailouts, ladies and gentlemen. We're quite happy to regulate. We clearly stated that bailouts would be our last resort, ladies and gentlemen. So we're quite happy to do other things first. They also said, well, no thank you. Shouldn't people save for a rainy day? We're happy to make them save for a rainy day. But we don't think because you didn't see a once-in-a-lifetime economic tsunami approaching, ladies and gentlemen, that you should be made to punish. And what's more than that, that your workers should be made to punish, ladies and gentlemen. Made to punish in their millions. And that leads me on to this final point, this final question of clash. I'll take you in a second. Of will it benefit or harm citizens? And this is something that we've argued in both our two constructive speeches, and this is something that's never been engaged with by side proposition. Go ahead.
Would Team England have saved the buggy manufacturing industry if it had had 100,000 people employed?
We think, yes, we would have. If there were entire towns reliant on it in the same way that we've outlined from the start, if hundreds of thousands of people in towns across the United States of America would have been fundamentally unemployable for decades upon decades, then yes, we would. We also say if that was the only automotive industry in operation and no one else would have been able to step in, then we would have bailed them out if that was the scenario. So let's look at will it benefit or harm citizens? Because their first speaker stood up and say, well, it's going to be really bad for the taxpayer. We say, actually, This is the type of thing that we collect taxes for, ladies and gentlemen. We collect taxes to help the needy. That's the whole point of social welfare programs around the globe, ladies and gentlemen. You see someone in need, you help them out. When you have someone employed, we're willing to pay them unemployment benefits. We don't think Team Canada are going to oppose us on this. Let's look what happens under their model. Millions of people are unemployed. That's going to be a whole lot in welfare checks, ladies and gentlemen. We also say it's okay to do this because individuals benefit from the security from knowing that if this happens to them, if they're in the shoes of the people working for General Motors in Detroit, then they're going to see the same benefits which we're providing to them. We gave you this argumentation in 16 minutes of analysis about how you can have massive harms to entire communities. This was something that was only flippantly dealt with in saying, oh well, we're going to see a phoenix arising from the ashes. Let's look at why this just simply isn't the case, ladies and gentlemen. On Team England today, we want to protect jobs. We want to protect people in these jobs from the type of social problems which we outline, the problems of depression, of alcoholism, of substance abuse, the problems that were never dealt with by side proposition. We say, if companies close, this is the types of things that happen. This doesn't just mess up one generation, ladies and gentlemen. It messes up generations for decades and decades to come. That's what we've seen in Pennsylvania, no thank you. That's what we see in Welsh mining villages where the coal industry was allowed to fall. We see education suffering. We see children who've got nothing to aspire to because both their parents are depressed and don't have jobs. And so we see low achievement in school. We say this is a generational problem. Even when you do have a few lucky kids, no thank you, who come through these schools and do really well, they don't stick around in a town where there are no jobs, ladies and gentlemen. They head off to the city where they can get some employment. We say, as a result, there's simply no one in these towns who is employable. There's no incentive for businesses to come in and take up these jobs to try and give these people a glimmer of hope. We do offer them this glimmer of hope, ladies and gentlemen. We say we don't allow these towns to become toxic. When we have these companies, when we can see a company may be on the verge of collapse, we can A, prop up that company and ensure that the people in those jobs are protected, or B, incite and incentivize further investment into these towns before the company goes bust, before all the social problems, the endemic social problems which you've outlined set in, and the people become fundamentally unemployable, ladies and gentlemen. We say when people invest in these towns, we save millions of citizens around the world. And this is one of the side propositions simply never engage with, ladies and gentlemen. At the start of his speech, Ed told you that the value of business is worth more than the last figure on a balance sheet. It's worth the livelihood of entire communities. It's worth giving a purpose to someone who would otherwise sit at home spiraling into depression. It's worth allowing a family to keep their house, having a bus to take the children to school, and allowing a grandmother to get in touch with their family. It's worth hundreds of thousands of jobs around the world. It's worth too much to let go without a fight. Thank you.
Each team is allowed 4 short minutes in which they can summarise the debate. And those short speeches go in reverse order. And so I now call on Edward Schwitzer to deliver the reply speech for the opposition team.
What the proposition didn't seem to understand today was that bailouts and nationalisation, they're different words for the same thing. When the government took a large number of preference shares in the Royal Bank of Scotland, some newspapers said it was nationalisation, and others said it was a bailout. But let's put that behind us. We don't really care. As long as the company was preserved by government intervention, then that is what we on side opposition stand for today. And I'm going to look at this debate in terms of 3 main groups: the taxpayer, the effect on companies, and finally, I'm going to look at the effect on people. So let's first of all look at the taxpayer. And this is fundamentally what the first proposition wanted to talk about a lot in his speech. He talked about a great principle of the taxpayer and how they shouldn't be forced to pay for other people's mistakes. That great principle which the other 2 speakers of his team undermined when they told you that they wanted the taxpayer to pay for nationalisation of companies. But also a principle which we undermined when we told you in our model, which they never responded to, that we are going to punish those that are reckless. We are going to cancel shares of the shareholders, which I said in my definition. We are not going to leave the shareholders there. Again, something they never responded to. We also said it's not always their fault. We gave you the example of American Airlines. They said, oh, well, they should save for a rainy day. We should regulate them. Fine, okay, maybe they should. But that is not always going to happen. And when they don't, we don't think it's their fault for these unforeseen circumstances. So let's look at the companies themselves. And they talked a lot about moral hazard right at the beginning of their case, something which they later didn't want to talk about so much when we gave the example of Barron's and how that was allowed to fail, and yet other companies later still acted in somewhat of a reckless manner. And they never responded to that example. We told you they're not incentivized to act recklessly because they're still going to lose their jobs. They're still going to have their CVs tarnished, and they're still going to find it very hard to get work elsewhere. They had all this stuff about how nationalization was different from a bailout. And again, we point to what I said in my model right at the beginning of my speech. We don't care what you call it, right? What you were saying is that it's unfair if shareholders stay there and continue to dictate policy. And we agree. And that's why I said in my speech that we were going to cancel existing shares and the government was going to run it through government vehicles like, for example, the Abu Dhabi Investment Group, something they never dealt with. But really what we wanted to talk about today was the effect on people, the harms to people themselves. I talked to you and I gave to you analysis into why not just in the short term jobs are going to be lost, guys, but in the long term you cause irreparable damage to workforces where social problems are endemic, and these kind of things were never responded to by the proposition. They were simply dropped. We talked to you about a vital social interest and where that's the case. In some of these cases, they had two different responses. Some of them, they supported nationalization, which I've dealt with, and in other ones, they just said, oh, well, it's not economically viable, so we just shouldn't do it. Like, we just don't accept that that's the case. They never said why this principle of the free market and being economically viable is worth destroying the livelihoods of thousands and hundreds of thousands of people. And we showed you why it's so important that a government has a duty to protect these people using taxpayers' money, ladies and gentlemen. The proposition have failed to prove to you today that we shouldn't bail out companies in a significant majority of cases. And that's why we have won today's debate. Thank you very much.
And to present the proposition reply speech, Iqbal Qassam.
Team England today began this debate by setting themselves the burden that they had to show that bailouts are good because they always preserve jobs. They never told us how many or how well it works in the long term, just that we have to preserve jobs. As we went down the line, Team England moved steadily farther and farther and farther away from this premise, and ended by saying that we need to protect essential services. So the question of this debate then became, how do you best protect essential services? Unfortunately for Team England, they completely failed to understand Team Canada's case. What we told you is that we're completely okay with companies who provide services that can be filled by other companies failing. What Team England tried to do is to tell us that nationalization and bailouts are the same thing. We think Team England should have Googled bailouts before they walked in the doors today, ladies and gentlemen. So the question then is, what is a bailout? And it's really a shame that this is a question because I thought I dealt with it pretty well at the beginning. What we told you is that a bailout is a mechanism that preserves the essential private structure of a company, that gives it another shot, even if it puts some regulations on the company. We think that no bailout in the past has ever completely put a company into public hands. So now that we've cleared up what a bailout is, do they work? This is the second question. What we told you is that they don't work because they preserve the existing private infrastructure that got the company into trouble in the first place. Team England said, no, we're going to let companies take over, and that's not a bailout. And we simply think, ladies and gentlemen, that when we proved them wrong on this, they had no response. We showed you that bailouts don't work because they remove a deterrent for a company to take excessive risk. Team England's response was no, they don't, because they don't preserve the people at the top. Unfortunately for Team England, they don't know who's at the top. The people at the top aren't the shareholders and aren't CEOs and upper management. They're the shareholders, ladies and gentlemen, the people that Team England would keep in power. That was something they didn't respond to. They told us that bailouts prevent job loss, which is better for the economy as a whole. What we showed you is that that's not true if the jobs aren't actually doing anything productive. They told us today, point blank, that they would preserve the buggy manufacturers after cars were invented, ladies and gentlemen. We say that that's a terrible use of taxpayer money and that pours money into something that is completely unprofitable and uses money that should be better spent. We showed you that the bailout that was given to GM costed $700,000 per job that it preserved, ladies and gentlemen, something Team England never responded to. We showed you that nationalization would only be used in a small minority of cases where the service needed to be preserved, not jobs. That's the distinction between our two cases. So finally, are bailouts the best tool? Now, this was the burden that Team England really had to prove today. Now, what we would say is that even if we operate from England's definition of bailouts, which according to them is nationalization, we think that because of the fact that it still doesn't completely remove the shareholders, we think that that's a problem. And we think that nationalization is different because it works in liquidity crises, ladies and gentlemen. It guarantees liquidity in the market. It guarantees that you don't spiral into a Great Depression, something private structures simply don't, something Team England never responded to. They told us that nationalization is the same because it also takes taxpayers' money. What we showed you is that it gives taxpayers something in return apart from just an IOU card, ladies and gentlemen. It gives them assets. It gives them a service. Team England said that letting jobs go is bad economics. What we showed you is that no, it's not. Short-term unemployment is a common part of any economic cycle. And we gave you the example of South Korea in 1966 and 74, something they didn't respond to. What we told you is that if you restructure a company but don't let people get laid off, you can't make a company profitable again, something, again, Team England never responded to. So on these three questions, ladies and gentlemen, the first one, very rudimentary, what a bailout is. Second of all, do bailouts work? And third of all, are bailouts the best tool? We beg to propose, because at the end of the day, ladies and gentlemen, we need to preserve everyone, not just the few.
The arguments that you've just heard and the issues that they have debated have swirled across the news services, the internet, the newspapers, and even conversations between people for the last couple of years. We've heard politicians, we've heard leaders, we've heard academics, and we've heard ourselves talking through these very issues for quite some time. I would respectfully suggest to you all that this afternoon we have heard as fine an exposition of the arguments on both sides as you would have heard anywhere in the last 2 years. And that's hardly surprising because this week in Qatar we have seen the best of the best coming together in the battle of minds. And while I have 1 minute on the floor here, let me, on behalf of all of the people who have come to Doha in the last week and a half of debates, say thank you to the organisation that has allowed this exchange of ideas to take place. Ladies and gentlemen, Qatar debate and its head, Dr. Hayat Mayarafi. This brings us to the end of the actual debate, but because this is also a competition, there's still one rather important step to go, and that is for the judges to make their decision. To do that, they're going to have a quick conferring, because Simon Quinn, on behalf of the panel, is going to present the reasons of the panel and announce the decision. That's going to take a little tiny bit of time, and in the meantime, we'd like to, I think, show you where this all began a week and a half ago with the various parts of the draw presentation from around the world. And if you haven't seen it, it's a bit of fun, and otherwise we'll be back in about 10 minutes or so with the result. If you would all please take your seats. Those of you who are sharp enough will have noticed that the number of people on the stage has increased ever so slightly. That's because each of the teams in the final round today has not just the three speakers who you saw, but they have, in one case, a fourth speaker, and in another case, a fourth and fifth speaker, who have taken part in some of the earlier rounds and who have made their contribution in getting these two teams to where they are this afternoon. And if you could welcome to the stage you always keep anticipating me. Could you welcome to the stage for the English team, Greg Farquhar? And for the Canadian team, Lyle Dobbin and Jonathan Carson. And I haven't told either of these people that I'm about to do this, but could we also have the two team coaches on the stage? Because the dark circles around their eyes tells you the amount of sleep they've lost and the amount of stress they've had in coaching the two teams. For England, Nick Pacheco. And for Canada, Tracy Lee. And so I think, Simon, it's time for you. And I suppose in the best traditions, come on, in the best traditions of Australia, I should say, g'day, mate. Tell us about the debate.
Thank you very much, Chris. Thank you, ladies and gentlemen. If you'll forgive my somewhat croaky voice, let me start by saying it's been a privilege not only to be Chief Adjudicator with Chris of this tournament, but also to chair today's panel of 11 adjudicators, or as it sometimes felt, perhaps to chair a panel of 500 adjudicators. All of us have, I'm sure, have an opinion on this debate. This was an interesting debate, although at times, as we all know, a messy and difficult debate to follow. The judges were unanimous on many things today. Firstly, in terms of the debater's style, all of the judges felt that every speaker in today's debate had excellent style, and indeed we were not able to separate the teams in any substantive way on that point. So turning then to issues of content and strategy, I think it's easiest if I explain this under a number of topics. Firstly, starting with this question of the definition. As everyone, including the debaters, admitted, it was disappointing in some respects that a grand final ended up being about the definition in some respects, but such is life. All of the adjudicators today felt that the Canadian definition from the outset was reasonable, particularly given that it was not challenged from the opening opposition speaker by England. However, the adjudicators also felt that the English did well to take the issue beyond a mere definitional challenge and to also try to point out the potential contradiction or at least tension that lay between nationalisation on the Canadian side and other issues, for example, issues of taxpayers' moral obligations and so on. All of the adjudicators thought that the opposition team did that well, but could have done that more and could have driven more at that tension that may or may not have lain at the heart of the Canadian case. So turning then to talk about the Canadian case's proposition. All of the adjudicators thought that it was a strong case, with clear analysis. We all felt that at times they could have been clearer in terms of talking about the mechanism, particularly the mechanism of nationalisation, which at times was sidelined, even though it was clearly an important aspect of the proposition model. In terms of the English case, we thought that the English did very well to present some very emotive arguments on the social consequences of company collapse, and several adjudicators in particular thought the English did a very effective job on the issue of dependence on companies and the interlinked nature of companies. We thought that these were points that the Canadian team at times could have answered more directly and more strongly. However, we also felt that the English team, like the Canadian team, could have been clearer at times in talking about its mechanism. For example, the exact how and why of how these social harms were going to be addressed by the model that was set out at first speaker. We also thought that the English team could have been clearer on the limits of its policy. If the English team was happy to have governments subsidise buggy manufacturers back in the day, then if and when would that policy stop? And how would that trade off the short-term and long-term consequences of a policy decision? We have a majority decision today, not a unanimous decision, and it was essentially in weighing up the relative costs and benefits that I've just set out that the panel divided today. It is my privilege and my pleasure to announce that by a majority of 8 adjudicators to 3, the 2010 World Schools Debating Champions are Canada.
There are going to be presentations in a little while, and it's at that point that it will be appropriate to do things such as presenting the various trophies. It's my task to conclude this afternoon's debate, and I'll do so first by asking you to give a round of applause to the team that has come so far into this final, has debated so well, and has come so close to winning the 2010 Grand Final. The runner-up, the team from England. And in my country, we have an expression that I think, Simon can correct me, comes from the world of cricket, which is perhaps the most opposite of games from the world of ice hockey. And the expression is, it's a long time between drinks. It's been a long time between drinks for the Canadian team. They first appeared here in 1988 in the Grand Final and won it, and 21 and a half years later, they appeared a second time and they've won it. Congratulations to Canada. And with that last round of applause, this debate is now over. The debaters and invited guests, you're going on to the presentation ceremony and to dinner, and we would like you to go out into the foyer where you will in due course be escorted to the venue for dinner. And for those of you who have come to watch this debate and are leaving us, thank you for coming. We hope you enjoyed the debate, and we hope that you will continue to debate here in Qatar. Thank you very much.